Hi everyone! This video will be about financial business model of a coffee shop. If it's useful, please give us a like, subscribe our channel, push the bell button and leave us a comment. Also, you can order financial business models from scratch or download this model. The link to download is below this video. If you have a business idea of starting your own coffee shop, this simple financial model can help you to evaluate the amount of money you need to start this business. Besides, you will also be able to see the profit, payback period of your investment and profitability of your future operational activity. Of course, it will be interesting for you to know how stable your business idea is if something happens with revenue, investment or expenses. So now let's go through the model and I will show you what items you should pay attention to if you want to run this business. In our model, all inputs are colored in blue. Other cells are automatic. First of all, we enter the year when all our financial projections start. Then, we enter the year and month when we get the first revenue. In our coffee shop, we can describe different types of customers. Each type of customer can have its own average check and food cost margin. What is important? Each type of customer can be switched on or switched off. This is very useful item because many steps forward, when you see the profit of your coffee shop and look at the payback period diagram, you will face a necessity to modify your inputs. For example, you'll see that some types of customers are too optimistic, and you want to see the financial forecast without them. Information you get using this switched on/off status may bring you lots of interesting surprises. Perhaps things you see will make you rethink your business concept. The next block of inputs adjusts basic quantity of each type of customer. When you start entering the data, the default value of this coefficient is 100%. But when your business concept is ready and you see the profit and the payback period, you may need to adjust the amount of different types of customers using this simple instrument. Using this coefficient will save you much time because you won't have to re-enter huge amount of data. Now let's move to the revenue. What is interesting about the revenue is that we have to create a credible revenue generating algorithm, which you will believe in when the financial forecast of your business idea is ready. What we are going to do now is to specify the amount of different types of customers for each day of typical week plus holiday. In addition, we are going to divide 24 hours into 4 periods: morning, day, evening and night. Why does all this make sense? For example, our coffee shop may be closed on weekends. This will affect revenue. Our coffee shop may be closed on holidays. This will also affect the revenue. Some types of customers won't come to us on weekends. Some types of customers won't come to us on Monday morning or Friday evening or Sunday morning, day, evening or night. When you start filing in the amount of customers for each day, for each time segment, you start creating a clear portrait of financial behavior of each type of customer. Doing it, you will easily believe in revenue you get in the end of financial model. Automatically, you will believe in profit and payback period. Then we move to the next block of input data. Here, we specify the amount of Mondays, Tuesdays, and other weekdays and holidays for each month to get a total of 365 days in the typical year. In the next block of inputs, we enter seasonal coefficients for each type of customer. For example, our revenue can decrease in January and increase in September. In this table, the parameter value is 100% is maximum. So, here we describe the seasonality of revenue for each type of customer. When we start our coffee shop, we won't be able to get maximum revenue right in the first month. So we need to set up the pace of achieving our planned amount of customers. This is really a very important block of inputs because it affects the appearance of operational losses. These operational losses appear during a time period when expenses are higher than the revenue. It's a period of reaching the break-even point. These losses must be added to the amount of money needed on the investment stage. Operational losses plus investment will give you the final amount of money needed to start your coffee shop. Then we describe people, their positions, salaries, amount of people on every position. Our coffee shop also has some fixed costs which can be specified here. Then we move to one of the main blocks of inputs, investment plan. Here we can specify what items we invest in, what is the price of this item, how many items we buy, and when we buy this or that item, month and year. Also, we have a depreciation. For the item, we can set a depreciation status and enter the period of depreciation in months. The next block of inputs deals with taxes. We can set the tax rates and move to the cash flow statement, where you will see the results of financial modeling. Cash flow is the main statement where you see financial efficiency of your business idea. What valuable information can you get from this table? First, you can see the total revenue, direct and fixed costs, payroll, and taxes. Second, you can see your monthly profit and cumulative cash balance. Third, one of the main things you'll see from the cash flow statement is total amount of money you need to start the business. If you see that total financing is bigger than the amount of money you have, you can add a loan parameters. Amount of loan, month and year you get it, loan term in months, interest rate, and grace period for interest and body payment of the loan. After cash flow statement, we can see lines with profit and profitability. Then you can see a discount rate and look at the final financial efficiency parameters of your coffee shop. Now we can see the graphic illustration of our business idea. Here we see in monthly detail, simple and discounted payback period, loan coverage ratio, revenue and total expenses, profit, profitability, cash balance, cumulative profit, operation profit and loan payment. Then we have the same information done yearly. On the next Excel sheet, we have gathered yearly consolidated cash flow statement, profit loss statement, and main financial result of your coffee shop. Finally, we see the financial efficiency of your coffee shop. Is this model stable? What will happen with your business if revenue decreases or expenses rise? Now it's time to apply sensitivity analysis. Further, we have several Excel sheets where we test financial efficiency. We test the influence of such parameters as revenue, fixed and direct costs, payroll, investment, interest rate, and loan amount. How does it work? Let's go to the revenue sensitivity test. Here we set the pace of increasing and decreasing the revenue. Then we push Sense button and see when our financial efficiency will go negative. Now we see how stable our coffee shop is. Plus, it's a great moment to rethink your business strategy in time before you start investment your money in business. Maybe it's a good time to return back to inputs and create a new scenario which is more financially strong. The same story happens with all blocks of sensitivity analysis. So this was Coffee Shop. You can download this model. The link to download is below this video. If this video was useful to you, please give us a like, share it with your friends, subscribe our channel, push the bell button or leave us a comment. Also, you can ask us to prepare an individual financial model of your business idea. Stay tuned and bye-bye!